Welcome to the Millionaire Journey Podcast. The goal of this podcast is to guide and empower you on your journey towards financial independence. Here's your host, Len Yaney.
Today, my guest is Kent Sariano, founder of Market.Raise.Repeat. Welcome, Kent.
Hey, thanks for having me.
Yeah, so found you on LinkedIn. Love your feed. A lot about financial independence and capital raising, and I just figured I'd get you on the show.
Yeah, thanks for having me, man. It's cool to be here.
Great. So if you could, just tell us a little bit about your story.
Yeah, so basically, I'm a marketing guy. I was living in Hollywood in 2020, and I was writing screenplays, and I found out my girlfriend was pregnant, and we moved into this tiny little shoebox apartment. And then the pandemic hit, and I was like, oh man, I better get a real job, right? Because writing screenplays on spec isn't making me any money. So I got into this thing, which is called copywriting, which is basically helping people write ads and, advertising stuff to sell their products and services. So I did that for a couple of years. And then in 2023, I met a client who was a new fund manager, and he wanted to write a sales webinar to help raise capital for his private lending fund. So I wrote that for him. We ran it to his list. He had a list of 300 people, friends and family, and it raised him $50K.
Wow.
So I was excited. I was like, $50K, that's a lot of money, right? Because, a lot of the services I was selling were $1,000, $2,000. So, yeah. And then after that, I was like, I'm just going to go all in on this real estate niche because I thought that was some pretty good proof to kind of plant my flag with. And, all of 2024, I basically just niched down and worked with a bunch of developers, syndicators, fund managers, and kind of helped them all over the place with their marketing. And so it's kind of what I do now.
So with the guy that you helped raise 50 million, what was his background before that? Does he have an extensive background and then he hired you? Is that how that worked?
Yeah. So it was 50,000. It wasn't 50 million.
Oh, I heard 50
I wish
million.
I could say 50 million. Yeah. So it was, he actually, how he got into the whole thing was he was working at a venture capital firm, and then his dad passed away and his mom had an inheritance, but she was, I don't think she wanted to go back to work. She was a little older, I think. So he invested all her money into passive income. And so, basically he took her money, turned it into, 100K, 150K a year in passive cash flow, and decided, okay, this is what I'm going to do full time. And so from there, he went on to open his own fund and kind of partner with some of the guys that he had used in the past.
Cool. So how did you actually get, you're self-employed. How long have you been self-employed? How did that happen?
Yeah, it was about 3 years. Because we had our baby in 2020 and we moved back the same year. And then I did some part-time marketing admin jobs at a couple local places. And I was like, you know what, I'm just going to go out on my own and try to grind it out as a copywriter. And so I've been doing it for 3 years now, full-time by myself.
This might sound like a silly question, but what is copywriting?
Yeah, so copywriting is basically persuasive writing that gets someone to take a response and take the next step with you. So if you're ever on Facebook and you see someone, you see an ad for I don't know, a hairdryer or something, right? And they convince you to click it and buy, right?
Yeah.
That whole ad and all the language and the writing that goes behind it is copywriting. So applying to the world of real estate, it might be an advertisement for your free ebook that teaches people how to do due diligence, right? And get them into your funnel so you can start marketing to them over, a period of time until they become an investor.
Cool. So what do you think when you're creating these ads, is it how did you learn about that? How did you figure out the right wording or how to get to be able to attract more capital?
Yeah. So, I'm basically self-taught. So I kind of went through this route where I studied all the old greats, and then it was trial and error. I worked with a Google Ads agency for 2 years.
Wow.
Where I was the lead copywriter. So I would write the Google ad, and then you'd click on that and there'd be a page that tries to get your contact information. So I would write that as well. And we would spend anywhere from $4,000 to $15,000 a month on ads for clients. So I learned what worked really well pretty quickly. And, basically it's the easiest way to do it is talk to people's pains, right? So for instance, when I'm helping people market their businesses on LinkedIn, if you think about who's on LinkedIn, it's a lot of W-2s, right? So they some of them, they make $200K a year and they want financial independence, right? They're afraid they might get laid off in the next round of layoffs, right? Or, they just like, they're tired of like, saying, how high do I have to jump, right? When their boss asks. So we talk to a lot of pains like that, where it's like,
Yes.
are you tired of like, you know, being tied to your W-2? Like, what if you had a life where you can, have passive income, so you can become work optional. So we talk to those pains a lot. And so just learning about the market of people who are like qualified to become investors, right? That's kind of taught me a lot. If that makes sense.
Definitely. And I think I can totally relate, because before I left my W-2, I was so obsessed with becoming financially independent. And I would find like, let's see, like I would do pretty much, I would work on my days off and do everything, and I'd follow all this content. So it's like when you get there, it's like you're like, what happened to me is that I actually I actually started spending more when I became financially independent, which, because I thought, well, I don't have to save as much anymore. I like let off the gas pedal. And
Hmm.
then also inflation happened. So like my lifestyle went from like, 3,500 to 5,000 a month type. And then it went to like 10,000 over like quickly. And what I could tell you is that my craving for financial independence has like returned, and it's like a different
Yeah.
level of financial independence. So like for me now, I would say like, uh, great investors are generally like high income earners, business owners, and stuff like that. And I could see that. Like, it's like when you get to a certain level, it's like, well, you're already making enough money. It's like, now what? So that would be the change of my perception on how to get there.
Yeah, and that lifestyle creep is real. Like I talk
Yeah.
about that a lot, right? And even people who live in like a high cost of living area, like if you live in Palo Alto, right, and you make 200 or 250K a year, like you're still like between daycare and private school, right, and all those things, like you're still stretched pretty thin.
Yeah.
So yeah, it's definitely real.
Cool. So what are, I guess, the plans for like growth and in your business?
Yeah, right now I'm kind of just looking to bring on more retainer clients from LinkedIn, right? So I have a couple of those. So I'm trying to add like one or two more clients a month. And then I have, coaching programs that I do on the side. So I'm not like totally bogged down with client work all the time. So that's kind of what I'm doing. And it's all focused right now. It's all focused around LinkedIn, because I found like a lot of capital raisers and syndicators wanted help with like creating LinkedIn content. So I kind of went where the demand seemed to be.
Yeah, it's funny because when you said LinkedIn, and I could tell you before, when I had my W-2, it seemed like there was like all it was like trying to W-2. Now I feel like the algorithm has like shifted, and all I see is capital raisers, real estate, commercial guys, and yeah. So with the coaching service, what exactly are you coaching? Like, what are you trying to show?
Yeah, so basically, it's like for syndicators and people who want to get onto LinkedIn,
Yeah.
and they want to do it themselves, but they don't want to drop like $2,500 a month on social media marketing.
Hmm.
So what I do is I have like basically a 6-week program where I sit down, work with you, and I kind of work through. Okay, let's figure out like what's your niche, right? That's the first thing we do. So we figure out like, okay, what kind of investor do you want to go with, right? Like who do you want to target on LinkedIn? And, depending on people's backgrounds, I help them kind of like basically customize their profile to appeal to that guy, right? So if someone's like, it's really popular, like if like a doctor, right?
Yeah.
He's a surgeon and he's like, oh, I don't want to do it anymore. I want to get into real estate, right? So I'll be like, okay, well, all the problems, all the pains of being a surgeon. So why don't we sit down, customize your profile to just appeal just to surgeons and other people like that, right?
Yeah.
So that's kind of week one. Then week two, we figure out their about section, and then I teach them, gradually. Like I basically take them from like starter to like, okay, by the end, you know how to write content to an extent. You understand how marketing works, right? You understand what it means to have a market, and you have a profile that's dialed in to appeal to your target investor. So now you can go out, churn out content, and starting those conversations on LinkedIn. So
Yeah, so I think I'm pretty bad at it, is what it comes down to. As you're talking, I was like, I don't know any. I kind of have an idea, but it's like there's a part of me that I do this podcast for really a hobby, and I believe it
okay,
helps my brand, whatever. But at the same time, I generally enjoy like personal finance, and it's almost like uh, a lot of people probably wouldn't be interested in it, but I also think that there's a lot of people that are like very interested in it. So I kind of like, it's like I go into personal finance, and then it goes into the contrarian way of personal finance. Like we might be talking about like life insurance and stuff like that, but overall, I firmly believe in financial independence and cash flow and all the things that come with it. And it's changed my life. And it's, but cool. So I guess, do you have any questions for me or?
Um, yeah, I mean, you were telling me about like life insurance and how you use that. That's kind of, I looked it up after you said that, but what's that whole strategy? Because I don't hear it a lot, right? And you're not an LP investor, right?
N- well, yeah. So no, I'm not. I plan one day to be an LP investor, but my whole life insurance it's very complex. We have lots of podcasts that I've interviewed, but I would say that it's one of those things that it's the way I actually heard somebody talk about it is like when you're people, it's like almost like having a credit card rewards. You're going to spend the money. You might as well put it on a credit card to get the rewards. And that's kind of how I look at life insurance is there is an upfront cost to it, but at the same time, you have the benefit of having life insurance for the rest of your life. And then after year really one, you pretty much start breaking even with all of your spending. So I plan to invest a lot of money into real estate, but it goes into the whole life policy first before it goes into anything else. And you
Okay,
can
good.
you borrow it pretty much right after. Um, you can borrow it really after you put the money in. You can take it back out and then put it into your own deals, and then you take all the cash flow from the investment to flow it back into the life insurance. And over
All
time,
right.
the crazy part is that it'll be like a whole life policy that's like $1.5 million worth of benefit. And if you consistently are flowing your money through by the time you're 70 years old, it'll be about $5 million worth of death benefit. So it's kind of like you haven't done anything different. You just take your money and you plant it into the life insurance first. Is pretty much the short story.
Wow, nice. That's awesome.
Yeah, and
That's cool.
I would tell you that it took me 5 years to figure that out. I saw it 5 years ago, and I was like, "Oh, this is totally a scam." And
Yeah.
I had I actually talked to two mentors.
Hmm.
Both of them very financially successful. And I asked them, I was like, "What do you think of this whole life?" And I thought they were going to say, "That's the dumbest thing you could do." And then they both said, "I think you should do it. Like, I think you should. I think it's a very good idea to have life insurance for your whole life. Like, the problem with term insurance is that it drops off when you really need it. And I could tell you that past year, I had 3 people die, somewhat close to me, not very close, but I watched the effect that it had on the family. And they were older, past 65, which you would think buy term and invest the rest. Well, after 65, the term drops off and you didn't invest the rest the right way, or your lifestyle expanded too much to where it couldn't support what your spouse was going to be able to afford, and you literally are leaving her high and dry.
Oh man.
Sounds terrible. And I can tell
Yeah.
you it happened to 3 people that I know. So it's like their life had to change after this person, the person that they were relying on died. So
Yeah, and
crazy.
that's a scary thing. And I think a lot of people like that's why they get into investing too. Although maybe the life insurance is a great option as well, but
Well,
I
I would
know.
say the life insurance is they call it the and asset. So you put it there, then you do something with it. So you don't leave it in life insurance. You don't. It doesn't stay there. It starts there and then goes to the other investments.
That makes sense. That makes sense.
Hey guys, if you want to learn more about our deals we're investing in, go to our website and sign up for our free ebook, 10 Reasons Mobile Home Parks Outperform Other Real Estate Investments. We won't spam you. We'll just keep you updated on the podcast and the deals we're working on. Now, back to the show. The best way I heard it just recently is like credit card rewards. You were going to run it through the credit card anyways, and now you're getting points on the way. So, but yeah, it all ties back to building liquidity. I would say also the difference of 401k.
Hmm.
Okay, so say my goal, and we'll say the people that are listening, everyone's goal. Well, not everyone, but everybody's got different ones. But I'd say the goal is to make 20,000 a month. We'll just say adjusted for inflation. Everybody wants to make 10,000, but now you have to make 20,000 for inflation.
Hmm.
So how do I get to 20,000 a month? Uh, and if I'm putting money into my 401k, even if I have a high income, and you're going to try to protect yourself from these taxes, you're pretty much taking your dollars and put it into something illiquid that's taking you
Hmm.
away from your goal. So I would say maybe we don't do that. Maybe you uh, put it towards something that's, might be more liquid, whether it could be just a bank account or what I have done is a whole life policy. And then when the opportunity shows itself, if you have $100,000 in the bank account, uh, there's an opportunity that will come up that will create $20,000 a year in income, whether it's through equity appreciation or through cash flow. And it's pretty much that's how you get to financial freedom, is through becoming liquid, being able to invest your asset dollars into, income producing assets to later not have to worry about it. And last thing I'm going to say, I'm on the soapbox right now.
No, it's cool. I love to hear it.
But the big thing is like everybody. It's almost like the idea of financial independence. Almost everybody has financial independence within 10 years, as long as they're focused. So you have these guys that retire when they're 30 years old. It's because they started when they were 20 years old. There's guys that retire when they're 70 years old. It's because they focused on it when they were 60 years old, So it's like, when do you start? I would say right now. And where do you put your dollars to something that's you're going to create liquidity and or accelerate liquidity. So the cash flow will make it to where your savings rate will increase. If you can have a higher savings rate, the sooner you get to 100% savings rate is when you become financially independent. So if you can save 100% of your dollars that you're earning at your W-2 income, is when you become financially independent.
It's pretty cool. I've never heard it put that way before. But I have a client who kind of preaches something similar, where he's like, put your money into something that's like liquid or semi-liquid, right?
Yeah.
Like a private lending fund is like, can get like 10% and you can pull it out in like 3 weeks or maybe 15 weeks somewhere, right? And then he says, just park it there until you have the other deal that you want to put it into,
Yeah. So
I don't know if you agree with that or not, but that's
100%.
I hear a lot of advice from people.
Can't remember his name, but I had him on my podcast probably about a month ago. And my theory is actually everybody says that you take risk when you're younger to slow down when you're older. But I actually think the problem that happens is when you're 20, it's actually ignorance. It's not risk. It's like the risky asset is ignorance. And, but if you were to focus on your personal income to boost and say, put your side investments, as in like if somebody says the stock market or whatever, it's like you want to put it into a super unrisky, like what you're saying. You put it into a lending fund to where it's growing at 10%. And over time, when the opportunity shows up, you can be able to pull it. And I think if I actually did that when I started about 24 years old, I started putting money in my 401k. But if I started putting money into like a liquid type asset to be able to, it's more of like an opportunity fund, I would have been able to become financially independent sooner, is what it would have turned into. But I maxed out my HSAs, I maxed out my 401k, my wife's 401k, her IRAs, my IRAs, and that's what everybody tells you to do. And it was just keeping me from growing as a person, because if you like your W-2 job, it becomes a better job when you don't have to worry about finances. And if you don't like your W-2 job, you can change your mind and leave somewhere when you become financially independent. You can't,
Yeah, totally. I mean, it definitely has a different, your mindset's different when you're like dependent on that paycheck, right?
Yep.
Because then that's when the resentment builds. You're like, you got to go into this job and keep grinding. And it's like, if you can't get that mindset right, then you're going to have a hard time. So if you're financially independent or you're putting a lot of your money towards savings, and you can see the exit strategy, right?
Definitely. And I think your work ethic is still the same. If you're a poor worker, you're not going to be a good worker later. But say for me, I worked at a REIT, American Homes for Rent, and I managed it as if I were owning the company. And I think that's how I moved up the ranks as well. Like people could see like I cared, and my own financial house was in order. And if I didn't have that, it would have been like, we can't trust this guy to manage anything. We're 350 houses a month of, I can't even imagine. Never did the math, but it's a lot of rent that has not been collected. And also the 350 houses would probably be close to like $100 million worth of real estate, I think. So it's like, are we going to trust somebody that can't keep their life in order, or are you somebody that can take care, they're taking care of their own life to be able to capitalize on, help them grow their own business, so.
Yeah, it's funny how your outside life reflects like your work ethic and your value like within a company, and whether people can trust you or not.
Yeah, definitely. And then putting yourself in the right circles and stuff like that.
Yeah. I mean, this is one thing I've kind of liked about working with all these different clients is like, they're so entrepreneurial, right? And like the ones who succeed always have like the same mindset. It's so weird.
What is
like,
that?
So a lot of the guys are like, if I'm showing it on the surface level, then I have like 10x that beneath, right? Like a lot of these guys are like, they saved, right? They buy all their cars in cash, right? They don't drive flashy new cars, right? Until they've made bank, right?
Yep.
And they're very strategic about how they make their investments, right? Like they don't just like fall in love with a deal and go into it, right? They have like a plan. They have an investment thesis, right? And they know how to execute on it. So they know what they invest in, they know why they invest in everything, right? And they also have amazing follow through. Like everybody that I've talked to who is successful, when they start an idea, they finish it. Like they follow through on it. Like a lot of people can't do that. Like they get distracted by the shiny objects, right? Um, but every single person that I've worked with who is like a successful real estate investor who has like, if you want to say financially independent or they've made the American dream, they all have that follow through, right? Always have it. And yeah, it's just a solid work ethic.
Yeah, definitely. I can. Yeah, and it really turns into, if you're not following through, you're wasting your time. So it's like, say you and I have a meeting, or even
Mhm.
this podcast, and I feel like I'm going to get something out of it for sure. So if I don't take something with that information, I've just wasted my time talking to somebody. So it's like the people that I get, a lot of people reach out to me on LinkedIn, trying to sell me something, and it's like I could schedule meetings all day long, but I have to, like, what I've done is it's the same thing with my email subscribers. So not
Mhm.
email subscribers, my marketing. So I unsubscribe to almost every single thing I do. And normally you can just delete it, but it's like now my email's starting to clean up, and it's like I don't have to look at it as like go through and delete it later. And then the same thing with meetings. It's like, who am I meeting with today? And is it going to be something that's towards the goal? Whether it's a new friendship that I create, that I believe, it'll help us grow, whether it's just information or through contacts. But I think that's a big part of my focus for 2025 is like, just stop, you know, wasting time, you know?
Yeah, no, you really have to justify everything you do.
Yeah.
Do you know who Dan Kennedy is? Have you ever heard of him?
It sounds
Marketing.
familiar, but no, I
He,
don't.
yeah, he's like a marketing guru. He's like the one I follow.
Ah,
But he has a really good book about time management for entrepreneurs, right? And the first thing he does is like he has you figure out like, okay, how much does an hour of your time cost, right? So if an hour of your time is like $500 or you've like $250, then that 30-minute meeting cost you like $125. And it's not someone necessarily who will like become a client, or they could just be a total time waster, right? Um, so I don't know if you're into that stuff and it's like you're part of your game plan for 2025.
oh yeah.
I'll
Is
send you
it
the link or something. I have
is
it somewhere.
is it Dan Kennedy or Dan Martell?
Dan Kennedy. Yeah.
Dan
Dan
Martell
Kennedy.
has something very similar. He says
Okay.
something like he plans on being, what he says something like about being a billionaire. And he says, if I'm a billionaire, then that means that my time is actually worth like something ridiculous, like $500,000 an hour.
Mhm.
So he's like, I have to look at, is this worth $500,000 an hour?
Yeah.
and that would be a hard one to look at. But yeah, I have that book, Dan Martell, Buy Back Your Time.
Okay. Yeah. I've heard that.
And
Yeah.
I haven't read it. It's just been on my to read list, but I hope I didn't get rid of it. My wife likes to get rid of books
Oh
secretly.
no. You need a
She'll just,
library, man.
yeah. It's like we're somewhat minimalist, so she'll, minimalize constantly. So
I gotcha. Yeah. Yeah. It's definitely, you notice that more as you get older too, right? Like, it's like, man, I can't have these meetings where like they don't go anywhere. People are just like, they don't want to do anything. And they're just like trying to pick your brain, get free info.
yeah,
Right. Like you can't afford that stuff. Like your days are too short. Like time moves faster as you get older too.
yep.
You have kids. It's like,
Kids,
yeah, I'm like, I'd rather spend that 30 minutes with my son than, you know, some stranger. So
100%.
yeah, you got to protect your time for sure.
The time, yeah. There's everyone is here to steal your time.
Yeah. That's what he calls them. He calls them time vampires, right? Like they're
Yes.
time vampires. Come in, take your time. So
What's the name of that book?
I can't remember. It's either time management for entrepreneurs or I'll send you the link. It's Dan Kennedy. I have it sitting like right here, but I think it's like the No BS book, the time management for entrepreneurs who
I
want
need
to
it.
whatever 10x or profit. Yeah, I'll send you the link. It's a great book. I love all his stuff, man. But yeah, definitely worth checking out.
The one thing I've there's a few things, but like I try to set my goals very simplistic, but very obviously, like right now, I told you we bought 300 units last year
Yeah.
and have $100,000 worth of lost rent every month. So that's a lot of rent. And I looked at, we have a lot of evictions going, and it's not because of the economy or anything like that. It's just that it's part of the process of buying really rough places.
Uh-huh.
But what I would say is, I look at it and I say, okay, so if I were to back my way into what the value of those vacancies would be if they're occupied, it turns into about $18 million worth of real estate. So I think if I can, instead of going out and spending my time trying to buy more real estate, how about I create $18 million worth of value inside of the portfolio that I have? And so my main goal right now is focusing on operations, getting our team set up to operate without me, and also to fill up 100,000 worth of vacancy. And because we have about 25 in evictions, we have to have like 35 leases a month, and to get there, that's like 10 months. That means I have 10 months to do it, because that's like a 10 unit absorption is what we're trying to do. And it's a big fee. I don't think we'll have 25 evictions throughout the year, but at the same time, if we just get it a 10 positive absorption, we'll be able to get to 10 million. So that I have that goal, and then to prioritize my time towards that goal. And that's what we were talking about.
Yeah, for sure. And I mean, it's always like worthwhile to look at your business and say, where's the leverage, right? Like where can I leverage the things that I already have instead of like, going out and doing new stuff? Like I think about that with mine too. I'm like, why don't I sell more coaching offers, or why don't I just like turn more projects into like products and just do that, right? Instead of trying to create new stuff all the time. So it's like the same for you. Like, why buy more real estate?
Yeah.
Why not just optimize the stuff you have, right? It's got to be fewer headaches.
Yeah.
I mean, it's probably like stressful short term,
Yes.
right? But like long term, I mean, I can't imagine like acquiring new properties is any easier, right?
Yeah, you actually, for your scenario and marketing, we spend money on marketing, probably $2,000 a month. We're not buying deals or anything like that, but at the same time, we have we have $100,000 worth of vacancy. You fill that up, and your marketing bill is paid.
Yeah.
And also, there's retention. So the retention, it's almost like the marketing bill becomes even less. It's like your cost of customers. So if your customers aren't coming back, you're spending a lot more on marketing. So you focus on keeping we keep the residents, but also keep the investors happy, and you end up your cost per customer goes down, and you become obviously it becomes easier to move forward. So
yeah, it definitely costs less to keep a customer than acquire a new one. What's your strategy? How do you like remarket to your current investors? Because like I know a lot of people are like, if you're not marketing to them, right, they can go somewhere else. Like they have money to put places. Like, what's your strategy for that?
I actually love podcasts.
Yeah.
Podcasting is my favorite thing, and I could tell you there's a couple guys I like to follow, which is like Ryan Pineda. We have Alex Hormozy, and I would say those are the two that I kind of got the inspiration from. But like it's only because if they were in my car or in the room, I could talk to them like you and I are talking, and I know their whole story. I could tell you what they did last year, what they're doing like a couple weeks ago, and that's the kind of relationship that you build through podcasting. And we have about 50 people that listen every week right now, or at least the initial listeners. It's like 50 subscribers, I guess. But those, all those people are listening. If you're listening, definitely please reach out. I'll put my contact information below. I don't know who listens to me, and I don't, it's one thing I don't. It's like I could tell you what country they live in, but that's about all I know who's reaching, listening. So I'd love to hear who's listening, and talk about the podcast or whatever's going on in your life. That's like my favorite thing is through podcasting, and it's a great platform.
Yeah. I mean, you're right. Like the relationship you build with like that long form content, right? Like you just know everything about them. It's pretty intimate in terms of like, and it's long form. So it's like, like you're driving in a car, you listen to an hour, someone, I mean, that's way more powerful than like a LinkedIn post or an email, right?
Yep.
So pretty cool.
Cool. So where can people find you?
Yeah. So you can find me on LinkedIn under my name, Kent Sariano. Or you can find me at Market.Raise.Repeat.com. It's just a one-page website where you put your email in, and then I send like a weekly email. I don't send them daily, but I send them weekly. So if you want to stay in touch, read my emails and or reach out on LinkedIn.
Great. Also, if you're interested in financial independence, that's a lot of your content is what I've seen is through financial independence, which I could read it all day.
Right on, man. Thanks. I appreciate it.
All right. Thanks for being on the show.
All right. Thanks, Glenn.
Thank you for listening to the Millionaire Journey podcast. Please rate, like, subscribe, leave a comment, and share with somebody you think would enjoy listening.